Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we're supposed to do degenerate gambling with the equity index futures today, aren't we? I know, is a Friday. We don't really have super huge. I guess we do have University of Michigan. Is that the best time to do it? I know. We'll look. We'll look at it. Feeling a little bit better. My voice is still really weird, but it doesn't hurt like it did yesterday. Maybe as we go along, it will clear up, huh? All right. Well, let's go to the charts. You know what? Actually, I'm not sure we can go to the charts. It looks like Ninja is crashed when we started up. I'm going to say no on the saving the workspace here. Yeah, see what's this is like doing this thing. It's like one of the windows is stalled. So let's kill NinjaTrader here. Every once in a while, I'm telling you, I love NinjaTrader as a platform. I think it has some of the best charts, but every once in a while it will just crash for no apparent reason. Well, in the meantime, how are you guys doing? It's right. Did you guys watch that Federal Reserve meeting yesterday? That's what we got to talk about. Let's wait a little bit before we talk about that. Because that was oh my gosh. I could not believe. I watched it with on the TV. So my wife was in the room. And I'm like, oh! And she's like, what the fuck? Going on about? She didn't get it. She's like, shouldn't they be able to fire him if he's doing a bad job? I don't get it. No, the Federal Reserve Chairman's supposed to be independent. Eric, welcome to the stream. You're the first today. You beat Uzi. Uzi, you know what? He's been busy. It's okay. He can miss one day of not being the first commenter. I think he'll get over it. Okay, that looks a little bit better. Let's come back over here to the volume profile. All right, so the 10-year Treasury, they were kind of down in here, recovering a little bit, but then yesterday, it had a pretty good rise and a little bit of a rise after the Federal Reserve meeting too. Not too much, and now a little bit of a recovery in the overnight. And I feel like for a swing, I think my TLT position is maybe I should call it a position trade, but because I expect to hold it for a while. I think we should be able to get maybe at least the moving averages, if not these yearly highs at some point. So far, though, buying down here is looking pretty good for me, huh? S&P 500 had a pretty good day yesterday as well. I'm a little bit maybe they might have to take some profits today, right? Yeah, might have to take some. I don't know. We'll see. Oil just kind of there in that range. Gold and silver, they recovered a little bit, but they didn't get too far, and we're just kind of ranging there now. Capra's been all over the place, man. Good grief. That one's a little wild. They had a pretty strong buy yesterday and then came all the way back. Japanese yen. Okay, well, the Japanese yen is stabilizing a little bit and reversing to some extent. So that's good, I think. And the Bitcoin just holding its gains. But Bitcoin's the only one that they moved and then it was like, yep, we're gonna stay here. So okay. All right. So Let's make sure all of our indicators and everything are okay. I just want to warn for you guys that I've given the beta to. I'm pretty sure there is a bug in the market order imbalance. It's like it's not doing the calculation correctly, because sometimes it will come out with like a negative value where like it should never be outside. It should always be between 0 and 1. So if it's not between 0 and 1, something happened. I think that I had to change a little bit of logic in there, and I just like didn't, there's like a 0 that should be a 1, or a 10 that should be a 9 or something, so something like that. Oh man, my voice is not. It's weird. It's weird the way that my voice sounds. I hope that I don't get like the, tomorrow I just can't talk at all. But yes, yesterday my throat really hurt. Today it doesn't really hurt. So I'm hoping as we talk, it'll just kind of clear up. Flyby PR, what's up from Puerto Rico? Oh wow. I don't know if I've ever had somebody from Puerto Rico on my stream. How are things going on down? Didn't they have a storm down there recently? No, so what are we gonna do today? Well, we do want to potentially take some trades over in here. I think that I have order entry in MES turned off. Let's see here. See, I have the order column turned on. Oh, isn't it over here actually? It's right here. Yeah. Enable placing orders. There we go. Experimental. Okay, cool. Oh, now that's interesting. Where it shows me in the queue and okay. Now the question is, I'm using, what do they call it? To consolidation. Tick multiplier. Should I trade it like that? Well, let's just try it. Let's just try it. I think that might be good. So I'm thinking I want to have something where I could make or lose $500 a day. And I don't want that to just be one trade. Like I make or lose $500 and then that's it for the day. I would like to be able to take 2 or 3 trades. So let's make it like let's make our target be like 250. 250 win, 250 lose. I'll give ourselves the ability to let some ride if we want. So let's see here with the treasuries, with MES. It's $5 a point, right? It's $5 a point. Pull a calculator out here. And what we need to do is we need to figure out what the volatility of the S&P 500 has been as of late. So what I'm going to do is I'm going to pull up a chart. We're going to use ES. And I'm going to put it on a 5-minute chart. I'm going to load the last... let's use the last 30 days. Optimize candlesticks. I should change the defaults of those. Okay. And then for the trading hours, I only want like hour trading hours. So CBOT, interest rate, STH, the Seth trading hours is what we really want. Okay, so here we go. That's what we want. We get a good sampling there. And then we're going to come in and we're going to add one of my, I really should be more proud of this indicator than I am. There's a free version of it and there's a paid version of it. But we're going to use the paid version of the range histogram. And I'm going to click use area on there. And use log. Not limit by day of week. Okay. There we go. So this is going to give me a histogram of like where, how much the S&P tends to move. So if I were to take profits, basically what this is trying to say, the coloring, this is a feature of the paid version of the indicator only. It's saying that if you were somehow able to catch full profits on every one of these bars, they would be equal to the profit that you would make on all of these bars. Does that make sense? So there's more of these bars, but you make or lose more on these bars. So the break-even point is actually right here. Okay. But interestingly enough, we've got a pretty broad range here between what, 15. Oh, it's not. I need to turn the cursor on. There we go. Between 20 ticks, 5 and 20 ticks. And then it starts to roll off to 35. So I think we would want to take, so if it was 10 points, that would be 40. So 40 is 10 points. So 20 would be 5 points. 20 would be 5 points. So we would want something like our target is 5 points and our stop is 10 points. Yeah. Okay, so if it's $5 a point and we're going for 5 points, that's $25 a contract. $10 would be 50. 50 times 5. So we want to use 5 contracts. We want to use 5 contracts. 5 micro contracts. And maybe 5 points is a little bit much, but let's just go with that for now. Okay, so we want to catch 5 points, and we want to catch them in areas where we think that it's going to be relatively constrained, or at the very least that we're confident that it's not going to trend down against us, right? So right now it's relatively quiet, so I don't know if I really want to participate right now, but we do have a relatively low amount of trend, so that's good for us. I feel like the music's a little bit too loud. Let's turn that down a bit. There we go. So yeah, the Federal Reserve meeting yesterday. So one of these reporters asked Jerome Powell if President Trump asked him to resign, would he resign? And he said no, which is the correct answer. You know what? I really hate this. When she asked him, like, would that be because, like, you by law you don't have to leave or what, you know? And she was like shaking in her boots. She couldn't even get the question out. I really hate this kind of thing because it's really like the media inserting them. To me, it's the media inserting themselves in the story because Jerome Powell didn't really say anything. The story that's big is that he was asked the question by a reporter. It was a dumb question. And then the reporters were asking dumb questions because he left early, man. He left. It was like, I don't have to mess with this. So this is here. We're here to convey what our monetary policy is. And when you start asking political questions and like gotcha questions and things like that, you are not really using the press conference for what it's made for. He's going to leave early. So screw you, journalists. But you know what was the thing that I saw about it that was like, whoa, was like I went on the Donald Trump forums and there was a thread about it. And they were all like, oh, he should resign and like, you know, get rid of the Federal Reserve and all of these sorts of things. It's crazy. It's so frustrating because there are many ideas about how to deal with the economy on the right that are really good and are really catching like the things that we could improve in this economy. But then it's Matt paired up with all of these other ideas that are just absolutely bonkers insane. So we'll see how that one goes. We'll see how that one goes. Kind of curious that we're right at an even 6,000. Well, so as a test, let's go short here. I don't know if going short is really a wise idea, but Democrats should have listened to Bernie Sanders, historians say. If statistically 90% of traders lose money and don't make consistent profit, then why do you keep doing it? Well, for me, it's kind of a loss leader. Not for the stream. I mean, when I'm losing, it doesn't help the stream. But, like, it helps my other investments. So, that's one of the main reasons that I do it. Mir, good morning. Okay, it did fill. So we are looking for so this is where it's like, you know, let's take 4 off and let 1 ride. I know that like the risk reward that I'm taking on this is kind of silly, but and we're gonna give it like a really big stop too. Sorry, I was like, why am I clicking there? No, we want it right here. Okay. You wish the American people, where is that coming from? Wait, what's going on? Is there something bad gonna happen to me? Oh yeah, you got me all panicked now. Good morning, A. Paul. You're a little late. Wow, horrific night of violence against Jews in Amsterdam, really. No, Mr. Set. Okay, everything's good. All right, good. Is the post-election crypto jump a knee-jerk reaction or sustainable momentum? I'm not going to say it's a knee-jerk reaction, but I wouldn't call it sustainable momentum either. Probably it just kind of stays where it is and goes dead again. Until somebody has a good reason to actually buy it, which I don't really feel like anybody does. Market feels dead today. I think I might go to the gym instead. Well, we do have, what is it? University of Michigan? Consumer sentiment. That's a relatively important number. So it's not a no news Friday. I'm kind of questioning my numbers. Well, I guess I did want it to be like the loser was 250, right? So, okay. I guess I'm kind of stuck between, I don't want it to be like a full-on 2-to-1 risk-reward sort of a setup. But if I'm only, I guess I have 5-to-5, so I guess it is just like a straight up 2-to-1 risk reward setup. Let's just do it for that one, for this one, and we'll see. One thing I will say is that the liquidity seems to have come back in ZN. Like they've got 3,000s up now. Wanting to ask, why did you make the indicators to measure vertical instead of horizontal movements? Do you mean like when it comes to like the range histogram, for instance? Something that we did do was, and I have it on here somewhere, but I forget what the name of it is, but there's like a pivot chart, and I did something to like statistically measure how long a typical swing took as well. And I don't completely remember everything about it, but my recollection was that it wasn't that interesting. It was like a lot of work for something that didn't really reveal anything to us. EX resting package is not what would be a horizontal message. I think you meant resting orders, but what would be a horizontal measure? Per tick level? You saying like an indicator that tells me what the current, what the bid or ask is at one price level? Why would I bother with that? You can already see that on the DOM. Like, why would you need it on a chart? Yeah, I guess there's another answer to this, really, which is that the resting orders don't really tell you a whole lot. Like, what is currently there? People have this conception that I look at what is currently resting, and based on what is currently resting, I can determine whether I want to go long or short, or when is a good place to go long or short. No, that's not it. What is currently resting only matters in as much as knowing what was currently resting, so that when a change occurs, you understand what the change is relative to what it was before. But it is the changes in the level 2 that give us signals and do things for us, and not any read about what the current resting liquidity is. And pretty much all of these indicators are kind of telling you something about that, right? So this level 2 changes, for instance. Oh, by the way, we need to fix that one. Let's fix that one, because we want to just know the total. We just want to know the total, and the stacking and pulling overall isn't really that useful because it's always tends to be equal. There we go. Level 2 changes. It's telling us the relative amount of activity on the DOM. So it's telling us about how much change there is. Right? There's a lot of change or not a lot of change. Right? The resting orders, that's telling us aggregated how much there is. And then I have like a difference and a what is it called? What is it called? Min difference and max difference. So that's telling me, you know, when they stack orders, what is that total? And when they pull some orders, what is that total? What is the maximum that it was? And what is the minimum that it was during that time? And that's telling me like the difference between how many orders are coming off and on during that time period. If there's like a really big difference between them, that's kind of curious, you know? It's all about the changes. The models that we have that are using level 2 effectively are basically like they filter for a change in the level 2. So that's my indicators are all about filtering for major changes in level 2. Belligerent, welcome back. Well, so you're saying per tick level can give you more details. I just don't see that when it comes to level 2. So there's kind of this thing, there's this idea like, okay, cumulative delta. Okay. So I can see what the cumulative delta was for an individual bar. How much we moved up or down on an individual bar, right? And okay, so we have an individual bar where we had a really big change in cumulative delta. But maybe we moved a lot in that bar too. So it kind of doesn't really tell you how much, what, you know, the liquidity is doing. You would have to like divide by the amount of movement in that bar, essentially, right? So if we move down 4 ticks and you take the cumulative delta and you divide it by 4 to find out the cumulative delta per tick, right? Would that be useful? Maybe, maybe not. But like I can see why somebody might want to go and look at that, right? When you're looking at it from the perspective of the level 2, like that doesn't make sense. Again, there's resting orders there. The resting orders will change. The thing that matters is how it changed and why it changed. So now there's also the Vista chart, but again, I kind of think that Vista charts are useless. The only thing that really, like the currently resting orders, the only currently resting orders that really matter is like the inside 1 or 2 ticks. That's it. If whichever one is lower, we're likely to tick in that direction next. Did you hear about the fast track trading prop room reg poll? Scott deleted his Twitter and really? Wowzer. So did that entire business just disappear? That's crazy, dude. Let's see here. What do you got for me at 007? Interpretation. Date, time, instrument, ask, price, volume. Depth. Yeah, so depth 24 basically means how many ticks away from the current best bid, best ask did it happen at? So this is basically a change that happened like really far away, right? You often will filter those ones out because you might say, well, the ones that far away don't matter, right? Yeah, add, remove. No. So, yeah, this is where it gets weird. Okay. Well, let me explain it again to you. Let's just say that we're building a DOM, but it's a really small DOM. Okay. So we only have 3 prices here. We set, basically we're like, you're using Jigsaw, right? But the number of levels, by default it's 10, and we set it to like 3. Okay. And we tick down. Okay. What will happen is we're going to have to add the next price, right? We're going to add the next price. This one will become an offer, right? And we'll get rid of this one, and we'll get rid of this one, right? So when you're doing level 2, your data provider basically, it deals with this thing. It says, okay, this will be add, this will be remove. You get what I'm saying? That's why there are these add, remove, or updates. Okay. So you could have, we don't tick up or down, and one of these middle prices changes. It could be up or down, but it's going to be an update either way, right? Vista chart is not useful, but a series of events. Well, okay, so can we talk about the Vista chart, I guess, then? If you really want to talk about the Vista chart, let's talk about the Vista chart. Here's the Vista chart. Okay. So when we are watching the DOM, where are we looking? Right here. The inside 2 or 3 prices. So I want to see, okay, this 08 is going to be relatively low. And then how is it shifting? Right? Right now, they're not putting up a lot of liquidity out there. That's kind of a sign of a liquidity hole. But if all of a sudden that firmed up to 3,000 contracts really, really quickly, that's like going to really matter, right? You can't see that in the Vista chart at all. Like literally at all. Can we change the settings here to do that? Maybe. But you can't even really tell that, which are the prices that are like only showing 50. It's kind of like, it doesn't, well, okay, right now they're both 1,000. So like those are both 1,000. The 50 isn't any darker than that. I mean, yeah, you can change the depth tuners and things like that, but either way that you do that, it doesn't really show that difference. It just doesn't. We change the interval to like 1. That might help a little bit. But you really can't see that. So it just isn't granular enough. The Vista chart is kind of all optimized towards seeing these spots where there's like a big order that like up at 12. If we zoom this out again a little bit, there's this big order up at 12, right? And so the Vista charts focus all of your attention on where are the largest orders that are sitting on the DOM, and like, did they move or something? Which most of the time they don't. So like the Vista chart basically is optimized towards showing you all of the information on the DOM that doesn't really help you. It doesn't really help you. Now, I could change it to be like, the depth scope only shows me like 3 prices or something like that. Then you get this sort of a thing. Like that doesn't really help me either. So I have to turn it on to all 10. Depth tuner doesn't really help. Interval width just changes how wide the bars are. Yeah. Like the thing that is, I think one of the more interesting things that happens with the level 2, okay? I'm going to teach you something that we don't talk about very often, but is kind of like an empirically shown behavior of the depth of market, okay? That was a good one. Okay. So if I have 500 orders on the offer and I have 30,000 on the bid, okay, and there's going to be like how many orders pull. Like what I could do is I could measure and I could say how many, on average, how many orders per minute pull on that 500. Like there's always going to be a certain number of orders stacking on and a certain number of orders canceling, right? And what is the pace of that, right? Because if I can sort that out, then I can kind of determine like, okay, is like it getting thicker or thinner there on average, or whatever the deal is, right? Well, question. Do you think that you will see more orders pull from this 500 or more orders pull on average from this 3,000? And the answer is actually more orders pull from this 3,000. Why? Because there's more orders to pull. So the number of orders that pull, it might be more than the number of orders that pull in a minute off of this one, but it's a smaller percentage of it over here to the 3,000. So to your mind, it doesn't really matter, right? And this leads to this kind of interesting behavior. Like the higher that it stacks, the more orders there are to potentially cancel. And so there kind of ends up being these certain levels at which these two factors kind of balance out. So you will notice that when it comes over to here, like 32,000 is like how much there is on the offer, right? 24. And you will see those numbers over and over and over again. If it pulls back again, it'll probably go back to that 1,700 that they had earlier. And so you'll notice that the stacking and pulling kind of goes in chunks on average numbers. So it's like we have a price and there's like 500, and like if it stacks, the next stack would maybe be like 900 and 1,300 or something like that. And you would think that if I were to graph all of that, like I make a histogram of the number of contracts offered out at an average price, like how frequent those are, and you would think that it would be continuous like this, that 600 would be just as likely as 900, but actually it doesn't. It goes like this. It goes like this. So you can kind of see, you will kind of get a hang of, you might not even be consciously aware of that behavior, but you will just kind of naturally see it. You'll just kind of naturally see that it goes through those chunks, and it's like, okay, now we've come to this one, and then it came back down. You can't see that in the Vista chart because they use these colors, and it doesn't kind of adjust to like what those levels are. So like seeing the numbers matters. If I come in and I'm like, okay, here's a number that's like halfway between the two of them that I don't see very commonly, you know, I kind of know. Like this one right here, 500 is like average when it's not 500. What's up with that? You know? Or like, okay, they stacked the 1700, 1800 on there, right? Now they go back to the 1600. I kind of can say, well, that one is actually a weird number that's not like, you know, because of the stacking and pulling, it's going to balance back out. So it's probably they're going to go back up to the 1800 or it's going to jump down, but it's not going to stay there very long, right? So when I look at that one, you know, I know to kind of ignore that one because it's not going to stay at it very long, right? These are kind of the sorts of things that you can look at with it. And again, like the Vista charts just don't show it to you. They just don't show it to you. I think that people like the Vista charts because like when you're looking at NQ and ES and everything, it's all changing very, very quickly. And so like the Vista chart is a way to see what it was in the past and kind of try and get a picture like that. And they like it because it looks cool. But honestly, if you're watching a creator and they're talking about order flow and everything that they're getting from the order flow is from reading a Vista chart, I would say that you could just ignore them. Because the Vista chart is just not very good at seeing all of the empirically derived behaviors that matter. Another way of putting it would be, okay, is there a behavior that you can show me, like here's a picture of it on the Vista chart and that you can prove is a consistent proven behavior? Like that there's a study to show it? But there are things that you can see just on the DOM that are. Well, treasuries were kind of on the downside there for a little while, but they've kind of improved. And the S&P 500 seems to be reacting to that a little bit, maybe. But in Bookmap, we can see historical icebergs. So, I mean, like honestly, it might be interesting in a case where like a big iceberg shows up and it hasn't been there for very long. But like the number of times that something like that happens is pretty rare. And I really don't think that there's a whole lot that you can glean from when it does happen anyways. Like when that sort of thing happens, I'm just kind of like, okay, I don't want to trade it anyways. Now you can see stops, but you have to pay for the extra data. And we don't know if the stops provide extra useful information or not. We kind of would need to do a study on it. The one thing that I can do with and here's another thing, is that I think that the Jigsaw Vista charts are actually inherently better because you can do these histograms. And the other platforms that I've seen, I don't see them do these histograms. So like I can come in to the settings and on the auction Vista, and on the depth imbalance, I'm having it show only one level. Yeah. Flip, I'm telling it to use 5 snapshot levels. Okay, but let's turn off the flip one for a second. Now this is showing the thing that I say matters. This is showing the thing that I say matters. Change the interval width to much smaller. Okay. Now I can kind of see, right? There might be a spot here. You notice it was like really small. There wasn't very much being placed, bid or offer. And then all of a sudden, big spike. And it was even kind of like this, right? Look right here. You see that? It went from strong offer to strong bid, and those strong bids just keep being there. And what happened during that time? You see? That's what we're looking at. It's like, are they unusually aggressive with how they're stacking their bits? It's showing you that right there is a histogram. Okay. Well, you don't need the histogram. You can just see it. You're watching the DOM, but to me, this histogram right here has more predictive information in it than the Vista chart above it. Now, honestly, the sequence of events and the stacking and pulling on the innermost level 2 is the most useful and predictive piece of information. Okay. When you're watching this, keep your eyes here. You're just looking at those insight prices. D says historical. Let's see. Oh, geez, yeah. Well, so now these. So here's another way of presenting it: is kind of doing it by numbers and showing it as it goes along. I think that would be a better way of doing it. But you get so much information on the screen that it's really hard for your brain to pick up on anything in that case. So this is a place where, well, an algorithm could maybe analyze it and make something from it, but I don't, I think there's kind of some practical problems with how you use this as a human. Colors kind of help. I think that's all level 2 levels too, isn't it? I'm not sure. It looks like it. But I don't see where like the bid offer is. Or maybe these are just yeah. Like there's so much going on, it's hard for me to even sort out where it is. Like looking at my chart and being like, oh, okay, so where time period was this? And this is hard. Like the thing is, let me pull this back up again. If this is what you're looking at all day, your brain will start to try and find patterns in it. Because that's what the brain does, is it says, okay, here's my goal, and here's all of the I'm going to pass this information into it, and then process it in accordance with my goal. My goal is to find a signal that will make me money. And so it will realign the neurons in your head until it gets an answer that seems to match up with the goal, which is that it finds a pattern that, leads to a predictive moment where you can choose to buy or sell, right? Well, maybe what you're looking at is random, right? Your brain will find the best signal based on the data that it has, but it only has a certain amount of data, and, it's already assuming that there's a pattern in it. So if it's random, it's going to align all of these neurons to see signals that really aren't there. And this is why, as we've said, people will find patterns in randomness. They will think that there's something to it when there really isn't. And this is why you get all of these historical examples of people like trying to predict the future with chicken bones and that sort of crap. Right? So, if we want to use our minds to gain an intuition on something, we kind of have to be sure that there's an actual intuition to be had before we even waste our time on it, right? And that's why it comes back to some of these things like, like the Vista chart. The overall is what's overall resting there. Do we have a lot of evidence to suggest that the lay of the land, per se, like where the big orders are and aren't, provides some edge? And I have not seen research that suggests that. I've seen research that suggests that the depth of market is really useful, but in all of the studies that I've seen, they're looking at the changes in the depth of market and not necessarily just taking a snapshot and saying it's likely to go down from here, right? My throat does not hurt as much, but my voice is way worse today, wouldn't you say? Well, I tell you what, the S&P 500 has been awfully tight this morning. Who's this? I see this story where Donald Trump's potential AG pick threatens to put Letitia James' fat butt in prison if she doesn't back off president-elect. The name that I'm seeing here, Mike Davis, that is not the name that I was hearing from insiders that was chosen. So I'm skeptical about this story overall, like if it matters. The View thinks Harris would have won if we regulate social media. No. Well, it seems to me so far. Where's my Oh, it's actually gone 10 ticks in my favor and 13 ticks against me. Okay. Maybe it's not so bad. The moment I'm kind of like, it's not going very well. I'm also kind of like, maybe my target should have been closer. Oh boy, Trump's proposed tariffs will hit gamers hard. A study found that the cost of consoles, monitors, and other gaming goods might jump during Trump's presidency. Anything coming from China could potentially jump in price, yes. Things like electronics are cheaper than they should be. Look at how much it costs to get a phone compared to how much it costs to get a big chunk of iron. The big chunk of iron doesn't do anything. They're still incredibly expensive. How is it you can buy a piece of iron that's as expensive as a phone? But that doesn't make any sense. It's because the price of the phone is lower than it should be. They're selling it for way cheaper than what it would cost if you were making it in the United States. But Treasury's at the highs. I'm not sure if I have anything that says that like the overall flows in the Treasury should be long, but it looks like it's pretty good for like, you know, if we want to take a momentum's trade. I don't got enough persistent imbalance long in the Treasuries to really go along with that. I guess I do in the market order imbalance. Showing pretty high, but this is again where I'm like, I'm pretty sure there's a bug in this. I wanted to look at it yesterday, but I just felt so terrible yesterday, man. I didn't get much done yesterday. Well, it looks like they're gonna come to my stop, maybe. Oh. I mean, I probably should have bailed on this position a long time ago, right? I didn't really take this one with like the thinking that like this was a really good trade as much as it was. I wanted to put some orders on and just see how it goes and see if all my stuff is set up correctly, which it did. Obviously, it was a bad trade though. They decided to buy on the open. Was that on the whole hour? 41 minutes, yeah. All right. But I think the thing is that if I'm just going for like noise, 5 points is maybe too much. Like I shouldn't be able to hold that for 40 minutes, right? So maybe I do need to bring it into more like 2 points. Yeah. Two points is kind of what I remember using before, though. So it's just a little surprised it's working out that way. Let's see here. 243. Okay. So I actually got stopped out a little better than that. By the way, D, you know, just keep talking about how do you use that resting orders thing. Like, this is the sort of thing that I'm talking about. Is like, you'll get this shift. Right now, it's that the market, it moves away from it. Those aren't even necessarily the settings that I want to use, but there seems to be some sort of Markov system that you can use with this thing. I don't think I'm even using, because, you know, we had to re-add the indicators yesterday or whatever. This one is just the, oh no, it's the min difference and the max difference. Yeah, that's correct. Just when we were doing it before, we had filters on it because no filters wasn't working. But maybe that was just those days, because no filters seems to be working really well now. It's saying that there's way more liquidity being put on the bid than there is being put on the offer. And the changes as well. Like, there's a lot of stacking going on bids relative to stacking going on offers. SEC Chairman Gary Gensler likely to resign after Trump. You know what? I'm okay with that. I don't think he's done a very good job. He said the right things, but then I just kind of like, okay. Noticing, like, since the election, activity on Reddit has dropped off precipitously, but it is still very much leftist content. Like, more left-wing in subs that it shouldn't be. So they aren't going away. Kind of wondering, you know, like, there was definitely astroturfing going on, but the astroturfing was not like, you know, we paid a bunch of people in China to yada yada. No. It was like people with legitimate accounts volunteering to organize on a Discord. So I don't think it should be surprised that, like, it doesn't just completely go away. It might subside over time, but... Okay, so that right there, it would be an example of what we're talking about, where they kind of subsided, but the treasuries are still kind of showing some signs of aggressive bidding behavior Seeing something go on in oil here. Spoos seem to be coming back now. You know, not a huge change in cumulative delta, though, over in the equities. 2,000? Try it again. Wait, how many were we doing again? 5. Let's just go for 2 points, okay? I'm kind of tempted to come in here and turn on a power meter, you know? Like, say, reset it now to be able to tell if we're more buys or sells. Okay, well, there's some good selling right there. Above us in the treasuries, you kind of got a key point at 14 and then 16. Those kind of some benchmarks for us to look at. Okay, so I haven't quite gotten filled yet, but that one in ES was kind of a little bit more like how I was expecting a trade like this to go. Like, it did move against me, but my stop was so wide out there that, you know, is able to eventually come to my buy. And I was able to kind of identify a liquidity hole of sorts. So that's kind of like my thinking. Is like identify a liquidity hole and take advantage of that. It also seems though, because that was only $50, right? Yeah. I think that on those trades, I could just use 10 contracts. Basically change my size based on the volatility. So in the times where I think I'm going to go for 5, then I use half as many contracts. Is investing based on politics a shortcut to ruin? Yeah, I'd say so. No, am I not logged in? Hold on. There we go. The problem with politics is there's an extremely high noise to signal ratio. An awful lot is said, but that has a distant relationship with what is actually done. Announcements are frequently not followed through to the expected extent or magnitude, if they're pursued at all. More granular approaches might work better, such as baskets of thematic stocks, but the fundamental question remains, will policy be delivered to the extent expected and in the anticipated timeframe? Using politics as a guide to invest is a shortcut to ruin. That's true anytime, but especially so with a president as mercurial as Trump. Liquidity, price, and economic data remain the best stewards for your portfolio. Oh, so there's an iceberg there at 11. But they got through that. Interesting. Well, by the way, did I take 2? Yeah, I did. Okay. Seems like while I did get like that short-term sell in order to take a profit over here in ES, it still seems like it's mostly a buy. You're getting a pretty good run here on the highs that's not really being accompanied by a whole lot of delta. But we got news in 10 minutes, so probably not the best time to try and take something round. Looks like Jigsaw has put out a quote-unquote trading manifesto, and it sounds like I get it with my existing stuff. It'll be interesting to look at. Well, I don't see it. It's the order flow foundation, yes, when to enter, and the Stephen Kelly trading method. But I don't see this new one. Maybe I just need to wait a day or something. Oh, hey, it filled my, Alright, cool. It kind of looks like it's still in that mode, so I will try, market making this range again. Well, I don't know. I'll leave the order there, but I'm a little bit nervous about the number that's supposed to come out, right? That's looking good, though. Well, once again, my ability to predict treasuries is a lot better than my ability to predict equity indexes. I gotta keep reminding myself. There's news coming up. Just wait for the news to come up to go through, because I'm sitting here like looking at ES like, oh, is it gonna keep going? Doesn't matter. Doesn't matter. There's news coming. So I didn't like the way that it ticked back down from 14 and now another tick down. Yes, is back to the opening drive strategy. I mean, there was that initial move, but since 60-10 or so, it's kind of looks a little bit like directionless. I don't know. There's still buying in the deltas. Maybe that's not accurate. You can kind of see on my imbalance indicator. Let's come in and do this. Power meters. You know what? It's not this one that I want it on. It's... Oh, I don't have one. I don't have an ES one up. So let's add one. Boom. Yes. Oh, I didn't want a DOM. I wanted a piggy bank. Yeah, there we go. There we go. I want a power meter on this based on power meter. There we go. Do it like that. Okay, they're pulling for the news. Good power meter. Yeah, you can just put it like right there. Probably I should just put my indicators on an ES chart, huh? All right, here we go. University of Michigan sentiment expectation 71, actual 73. And then 1 year inflation 2.6 versus 2.7 expected, and 5 year 3.1 versus 3. So a little bit mixed on the inflation picture. Not entirely sure what the markets will do with this. I just leave that stop on the treasuries. I think it's pretty likely that it gets stopped out, but who knows? I think they're coming back up. They're coming back up. Over here in ES, I'm seeing good buying. Yeah, they're pushing there for sure. I've got a decent amount of latent liquidity there, though. Like, it's trading way more than the resting amounts. Both sides there. Well, the buying is definitely moderated here now, and yes. Yeah, buy orders in NQL. See, this is the issue with like YOLOing equity indexes. Is like from one perspective, like the people that are YOLOing this aren't really looking at a whole lot to do it. But for me to like really believe in a trade, like what do I got to put up on there to feel like I have enough information to know what's going on? There's so many things that I know about in ES that kind of matter and would help. Having all of this order flow information across all of the index futures would be one of those things. And it's just like way too much information to put up here, you know? So on this one, I'm a little bit concerned about after 16, so. Darn, stopped out. 1 for 3, that's not very good. Was that for 3? I think it was 3. Yeah. First one that was kind of a test, and the second one that we got that wasn't sized up big enough, and then the second one. Look at the treasuries step up to that 16 like that, huh? I don't know. ES is kind of reversing here, man. But it's doing so on a relatively flat change in delta. So like the speculators, at least, the futures traders aren't selling it. Huh. They're kind of getting, I'm starting to get big clicks over in ZN. I still didn't trade 16. You see why I was like a little concerned about 16? Let's move it to 15. Okay. Got filled. And now they're acting like, you should have done it at 16, Seth. But we'll see. We'll see if they tick it or not. I think it's going to take a little bit longer yet to tick 16. I'm feeling a little sleepy. What is your average trades you take every day? Oh, not very much. Let's just come over here and look. I honestly haven't been taking a lot of trades lately, so I'm not going to have very good information for you, to be honest. Because we're not in a very good position to take risk right now. But we could probably come and look at like the whole year. Yeah, look at the whole year. Why? Only the live trades. Let's say. How much have I lost? 166. Oh yeah. No, let's just make myself look good here. I did really terrible at the beginning of the year. Let's just do this right here. How many trades is that? Oh, actually, that's really good. That's actually really good if you take out the loser at the very beginning of the year. But I'm not using that like, oh, I want to make my stats look good. What I'm trying to you have a question about, like, what is actually realistic and everything, right? So this will be kind of give you a better idea of what your stats could look like when you're doing well, right? So my winning trade percentage was about, wait, do I have, is that gross all, net all? Oh, I see. Is about 41%. My losing is 44%, so there is about like a 10% that are scratches. There was a lot of scratches in there. Interestingly enough, mostly short trades, but that's what it should be with the treasuries this year, I think. My MAE and MFE are about equal on this. I prefer to have my MFE be a lot more than my MAE. It is more, but not a whole lot. Not by a whole lot, so. But that's about right. On the micros, in the micros, I'm making or losing $10. Yep. Those are actually not very good stats for me. Very often I have like an average MAE of about 7 and an MFE of about 14. So not as good as I would normally like it to be. I shouldn't have taken it at 15. Could have gotten 16 half or 17. So I was kind of like concerned, like, okay, I know that they're going to screw around with 16, But there could also be like a little bit of a stop run past 16, and there was. I should have waited for it. Oh well. Looks like a liquidity hole at 16.5 though. You know what? I shouldn't have closed that window. What if I change it to just my big ZN trades? Oh, that's not bad at all. Dude. $5,000? That's not bad. That's not bad. I've kind of been taking smaller trades lately. Where's the... oh, there it is right there. So what am I getting? Yeah, that's more like it. That's more like it. Dude, how am I doing this? 51% win rate and my MFE is almost double my MAE? Oh, man. That is like really clear edge. I mean, it's only a year's worth of stats, so I don't want it to be like, hey, look, this is proof that Seth is an amazing trader. No. The past performance is not indicative of future results, but those are amazing numbers for a whole year. Those are amazing numbers. It's kind of curious because I've kind of been trying to be degenerate with my equity index trades. So that my MFE is that much larger than my MAE and my winning trade rate is better than 50%. Is really shocking to me. Now, what about actual profit? When you come back up here. Average winning trade, average losing trade. Dude, it's good. It's good. And my max gain is 5. Like, it even gives me a good Sharpe ratio. This doesn't show Sharpe ratio, but that would be a good Sharpe ratio. Dude. And the crazy thing is, let's see here. Oh, it doesn't tell me. I don't know how many contracts I was using. I don't think I ever used more than 5 though. So, you know, like I could have put this $5,000 account and doubled my money in a year. That's not bad. That's like, hey, I should just put the money in and do it. We can live on $5,000 a year, right? Right, honey? I don't think it would scale to like 100,000. Probably not. I'm feeling good about them results, although it mostly happened at the beginning of the year, huh? It's kind of been flat since then. Haven't been taking as many trades over there, though. Well, we'll see how we do on ES. Today is a little bit more of an experiment. I'm not really sure what I want to do in terms of like when would be a good time for me to enter into a trade in ES. You know what I mean? Some of it could just be random. To be honest, it doesn't have to be that good. It can just be random. We'll just take what we did today. Of course, you got to take out the ZN trade, but That would be 500. 450. So we just take a $450 loss today. That's okay. And then see if we pass a combine. And yeah, some of it probably will be. Now, today's results aren't very good because I should have more winners than losers because of the risk reward that I'm taking, right? I was just thinking on Reddit right now. There's a lot of, oh no, they're going to come for all of my rights. They're not coming for your rights. So there's a story about, oh, transgender people are very afraid about what's going to happen, yada, yada, yada. Well, they're not coming for your rights. They are coming for your funding, though. I think that Donald Trump has a bill to like, you know, eliminate funding of that at the military and so forth. Yeah, they're coming for your funding for sure. I don't know, guys. It kind of looks like they want to keep going. Let's clear this. Bye-bye, Gary. Hello, Bitcoin. You know what I think would be the most listen, I'm not a fan of Bitcoin. I'm not. So like, what would be my dream scenario right now? My dream scenario right now, I think, would be everybody piles into Bitcoin because they think that the administration is going to be favorable to Bitcoin, and then the Department of Justice announces charges against Tether. That would be like the most fitting thing to happen here. Get everybody to go full bore on it, right? And then just absolutely devastate them with you know, proving once and for all that the price has been inflated by Tether basically acting like a central bank and printing money out of nowhere. But the reason I'm bringing that up for you, Eric, is to just point out that there are still significant risks to the cryptocurrency trade, even if the administration sounds somewhat favorable to it. Overall, I think that unless that happens, Bitcoin probably continues to rise. Come on. Fill me, please. So where I come back to, like, the Jigsaw sim is a little bit more picky. That would be filled. Like if I was on the Rhythmic Simulator, that would have filled me right there. Oh, you know what? I only have 5 lots on there. I should have 10. Okay, we'll fix that. It might as well happen. I'm not a fan of Tether, but as long as the fiat debasement has driven up the value of that. Well, and so here's the other killer, is that the actions that we anticipate Donald Trump to take probably strengthen the dollar. So that one was pretty good. So that time, for some reason, I thought it was just going to go up to the 5. Like, it had some momentum, so I moved it up to the 5. Kind of thinking maybe what I should do is, you know, like take the trade, and then if it's being slow, then I put the short target, and if it's doing good, then I put the long target, and I can kind of use the flows after I get in to kind of judge. And I don't necessarily have to go for a set target. Do you think that RFK Jr. meddling with the FDA will mean that you can consume raw milk? I wonder. I really don't think you should drink raw milk, but it's a little bit of risk involved in drinking raw milk. By the way, here on the treasuries, do I need to consider that this is maybe a bigger deal? Okay, so at 21.5, it becomes like a big deal. 21.5, we're above the election price. I don't know why I keep closing that window. I haven't really looked at like my full year stats very much this year. You know, like you lose at the beginning of the year and then you're like, it doesn't matter. Right? But I didn't look to see on the sim ZN trades. Did that apply to the whole year? I don't know how I got it to be what it was earlier. That is a little bit less if I do the beginning of the year. Why is that? Oh, I see. Because this was so great. Maybe I should go back further than that. We can go really far back, right? I don't know if I want to count all of 2020 because I was kind of like had a big change in the way that I traded around 2020. Okay. But I didn't really do it up until, when is this? It doesn't tell me the year. That's 2020, 2021, 2022. Okay, let's do 2022. That sounds reasonable enough. There is some volatility here at the beginning of this that kind of makes me think that I was, you know, screwing around. But yeah, okay. I feel like I should be tooting my horn about my performance more than I do. Those are some pretty good stats. Look at the man. How did I do that? I actually don't believe those numbers. How did I do that? Does that mean that I get to go on Reddit and call myself a profitable trader now and all that sort of stuff? Oh, man. Like, the thing that I always look at is, like, I want my percentage winning trade to be... It's going to be between 40 and 45%. And I want my MFE to be more than my MAE. That means that, like, because for me, like, we're trying to be the sniper, right? Like, we're trying to pick times where we really feel strongly, we know which way the flows are going and all of that sort of stuff. And, you know, so I given the tight constraints and the day and all of that sort of stuff, I wouldn't expect my percentage winning to be substantially over the how do I say, you know, like it shouldn't be over 50. It'd be really hard to get it over 50. So to be over 50 means I really actually am accomplishing what I want to do really effectively. It's just that I'm only doing it on these kind of goof trades that I'm taking up here in ZN. Where, and that's the funny thing is that, like, I was using multiple contracts and kind of like, I'll come over here, I use multiple contracts, I will kind of build myself a little bit of a buffer and then let it run, right? And I thought that would kind of result in MAE being higher than it is. So I'm really surprised with those results. I gotta point out, these are sim trades on ZN though, okay? These aren't live trades. But still, I'm flabbergasted, frankly, that over the last 2 years, literally that's 2 years of data. That's pretty good for 2 years of data. You get a higher, like almost 60% win rate. Okay. Well, let's come up here. Maybe my losers are big. They are. Okay. See, that's what I was like. I'm trying to be degenerate, so my losers should be relatively big. They're not that much bigger than my winning trade. But like the bigger thing here is that my MAE and my MFE is really good. So that means that there really is some strong signal to what I'm doing. And maybe I'm just not taking my profits well enough. That I need a better profit taking strategy. It's good. It's really good. So the question is, why am I not doing that on my micros? On my micro treasury yield futures? Well, part of it I think is that I'm working out positions with multiple contracts. So now the question is, should I just try doing the scalping thing over here in ES where I'm just trying to catch like 2 points? Or should I try doing what I do over here in the treasuries over here in ES? You know, where I build a position out over a range and I try and bake some profits into it first and then let some of it run. Why not both? I don't know. Because I kind of feel like that whatever I do in ES is really mostly going to be random anyways. Actually, you know what? It probably doesn't matter. Okay, so like here's the thing. I have this belief that isn't really backed up by the data. I have this belief that if your targets are closer than your stops, that you're more likely to pass a combine. But all of the kind of like the sort of statistical Monte Carlo methods that I've used suggests that it doesn't really matter. That it really just depends on how much, you know, like there's going to be a random amount, you're going to win, you're going to pass it 30% of the time or whatever, and then however much edge you have is however many more, the higher percentage that you'll pass. And like if you could get it to where you pass 50% of the time, that'd be amazing. You know, like that's kind of the thing that's in my head. So I'm sitting here like, no, I want my stop to be way larger than my target. And I want to take super tiny trades. Apal says, why not both? It just depends on the day and the liquidity, etc. But I guess I'm kind of saying that, like, I don't think that I have any way to determine when it's appropriate and when it's not. Other than how much volatility there is in the market at that time anyways, you know? What's the best time frame to use and get the most value out of your indicators? I'm currently running range bars and minute bars, and I realize you don't like range bars, but they help me a lot. Well, yeah, but that's pretty typical, is that you use the range bars and you think that they help you. But it's because they're kind of tricking you to some extent. But don't worry about that. I'm running on a 1 minute chart. But you know what, Raymond? I don't think that there's really an answer to that. I don't think that there's really a solid answer to that. We created those indicators because they allow you to see data that you otherwise can't see. And we have some empirical research suggesting that these sorts of things matter. But I don't have any kind of key setup or back-tested strategy that suggests that you should use it in a certain way. I've created the most flexible tools possible to give you a powerful tool set that you can use to find your own edge. So the real answer of that is put it on the time frame that you're interested in trading on and see what you can discover. Eric says, on the topic of Monte Carlo, I've coded a script to do Monte Carlo sims based on exported backtests from NinjaTrader. Can you give me some insight on what might be useful and valuable? So, the way that NinjaTrader talks about Monte Carlo, I don't actually know how it does it. Like, they're really vague about what their Monte Carlo sim is. You know, it's kind of weird. That's kind of a weird one. So I don't know how you do a Monte Carlo like that. Like, to me, a Monte Carlo would be like, let's go and make something that kind of performs kind of like the market, but it's really random. No, not even that. I like to me, an ideal Monte Carlo simulation would be, I go to 100 different alternate realities where the market is different in all of those market realities, but it is an actual real market. And then we see what the results of the strategy is over all of those different alternate realities. When you're talking about Monte Carlo on a back test, usually what they're talking about is they're trying to determine like how the risk management of it works, right? You know, like, are they able to limit the value at risk of the strategy? That's why you use those, is because there's this whole thing that's like, okay, I'm going to have a portfolio and have multiple positions. What happens if I get into like 5 positions and I think that they're all like really uncorrelated, but then all of a sudden something happens and they all drop at the same time? And then that's like the end of your portfolio, right? So you do all of this work to limit the value at risk and deal with the correlations and all of these sorts of things. And so how do you sort out how effectively you are doing that? You run a Monte Carlo simulation. You run it on not real market data, just something that's random. Now, how you do that with how that works with NinjaTrader, I don't understand that, to be honest. Because it's like, you know, I'm doing a strategy that's just like entry and exit conditions. So how is it randomizing that? I don't get it. I thought it was to gauge whether statistically the strategy overperformed or underperformed during certain. Well, but wouldn't that just be a back test? You just run it over actual data from the past, right? So let me try and separate it out. Okay. You have like the edge. Okay. The edge is like, what is this system looking at or looking for that gives it an advantage over other players? Okay. In most situations that when we're talking about backtesting something like that, we are talking about momentum. Okay. Commodities in particular have a tendency to trend. They don't do it as much as they used to, but momentum is still a pretty effective strategy, apparently. They have this tendency to trend, and so if you catch the beginning of that, your winners can be several times your losers. That is only if you're taking positions and you're really, really holding them and letting go. Nancy, hey, welcome back. Okay. And then there is the risk management side of it. Okay. Because the problem with the momentum strategy is that you are actually taking greater variability in your returns in return for greater overall return. So a momentum strategy can make more than holding the S&P 500, but the overall, like the drawdown on it, is going to be larger than the S&P 500. Like in a typical year, a drawdown of a momentum strategy is like 10 to 20%, right? And so when you're taking it that much, you kind of gotta worry about blowing the portfolio up, essentially. It's really hard to do that from just buy and hold equities, but a momentum strategy can blow up. So you got to do the risk management side of it, right? Well, if the strategy works well, and it works well historically, how do you really actually test the risk management of the strategy? Basically, there's not enough data to really test the risk management of it the way that you would probably want. So what do? You just make up data. You make up data and you see the rules actually do what they want. They'll limit the drawdown and everything to what it's supposed to. You know what I'm saying? So that's kind of where Monte Carlo, I think, comes about. Monte Carlo doesn't do a very good job at, I have some edge. How effective actually is my edge? Any strategy can be used to pass the prop. Why are you bringing that up? I mean, my whole thing is I think that you should be able to pass the combine 33% of the time. If it's just random and you don't breach the daily loss limit rule, you should be able to pass 33% of the time. Maybe even 40% of the time. When your strategy has a PTW of X and WL of Y, you generate a number between 0 and 1, and 1 is below your system PTW. You have a loser. I'm not sure what you're getting at all. I don't have your world-class edge tool. Well, so the reason that the term Monte Carlo came up is I wrote a simple script in Python that we're going to use in a video in the future that basically it takes completely random trades. It takes completely random trades that over, a long enough period of trades should break even. Like the expectancy. Basically, it says the expectancy is always 0. It says the expectancy is always 0. So and I don't know what Rurd was saying is what PTW stands for, but when you're talking about expectancy, I would use these terms, okay? There is probability, P, which is a percentage, and there is an R factor. Which is average win over average loss. Okay. Yeah, that is your win-loss ratio. I call it R factor. R factor. It's a risk-reward, essentially. So your reward factor. It's how much you win relative to the amount of risk that you're taking on. So there it is.
Block cell.
So when R is greater than 1, that means that your winners are larger than your losers. R less than 1 means that your system takes on more risk than it makes. Okay? So Based on this, P is equal to 1 over 1 plus R. Okay? So when P is equal to 1 over 1 plus R, that is a break-even system. That is a break-even system. So basically, I can come in here and I can say if my risk to reward ratio is 1, so my winners are equal to my losers, then the probability is 1 over 1 plus 1, which is 1/2. So P equals 50%. Da-da-da-da. Cool. Okay. You understand why this formula is useful? So, what my Monte Carlo simulation does for the for Monte Carlo testing combines or funded trader programs is you get to pass into it what your R is. You go in and you tell it my winners are going to be the same as my losers or whatever the deal is, right? And then, yes, it generates a random number between 0 and 1. And then it determines whether it's going to be a winner or a loser based on the P that you're supposed to get from your R. So it's assuming that you have a strategy that has no edge, that it is just like the long-term expectancy of it is 0, but in the short term, you could still pass a combine, right? What's the chances of you passing the combine? It's between 33 and 40%. And in my system, I thought, okay, well, if you use an R where your probability is high, shouldn't you get something that's like this, where it's like, yeah, and then big fall, right? And big fall. And over time, that should come out to 0, but the chances of you actually meeting the combine target in the meantime should be higher than a system that's kind of like this, you know, where your winners and losers are the same. Turns out that that's not the case. Turns out that the only thing that really determines the probability of winning the combine is what the ratio is between the stop and the target. So it's like the target, the stop over the target. So if it's like, or maybe it's the target over the stop. I don't remember. So if this one is like 3,000 and this one is 2,000. Oh yeah, no, actually it is. It's like this. It's one minus the target over the stop or the drawdown or whatever we want to call it. So if the target is oh no, why do I keep doing it like this? If the target is 3,000, is the stop is going to be 2,000 and the target is 3,000. There you go. Yeah. So it is 1 minus the drawdown over the target, right? So this comes out to be 2/3. 1 minus 2/3 is 1/3. So it varies based on the rules of the combine, right? But most combines, that's what they're looking for. And so it ends up being 33%. And like what your R factor is, doesn't matter apparently. Isn't that weird? I also thought, well, maybe it has to do with like how big the winners are relative to the target, but that didn't change anything either. So maybe somebody will think of something, because I'm going to make a video and I'll put the code up and you can mess with it. So what I'm trying to say, Nancy, is if you do not pass the combine more than 33% of the time, that means that you have negative edge, that you're doing worse than random. It means you're doing worse than random. Some food for thought. Because I don't think that most retail traders pass the combine 33% of the time. Now, part of that, though, is that, there are some combines that it's like you pass it and then you're immediately funded, right? Who was it that you said went under? Was it Fast Track? Funded. Oh, what do we call it? Combines? No. What did we call it? Oh, I called it prop firms. Duh. Prop firms. So you said it was Fast Track Trader, right? There's only this one that is like you go to a live and you go straight to live. And that is Trade Day and Earn to Trade. Yeah, that's funny because basically, if you have to pass the combine twice, like a lot of these, it's like once you pass, you're in a probationary period or something like that, where you have to pass it again until you actually get like real trading and they'll pay you and stuff. So then it's like actually 33% times 33%, and then it's really like 1 in 9 that you actually get funded and can make money. And then, of course, the chances that you actually make money from the funded, right? So most people don't make money from it. Just saying. Like, I think the thing is if I go back to these statistics that I've got here. Okay. My average winning trade is 352. My average losing trade is 467. My largest losing trade is 6K. So there's a lot of stuff in there that's like me screwing around and stuff like that. Okay? Like this first one was me screwing around. Could probably take that out. But well, okay, fine. Let's do it. Let's take that out. Let's just go to 02, 03. I have to do it like this. 02, 04. Okay, there we go. So that really big one is taken out. 2-3. I want to kind of go to this period. Let's do it that. Let's do 08. I keep making that mistake. Okay, that's a little bit better. And what is my biggest and smallest losers there? Okay, so I have a loser that's $1,000. And I have a drawdown of 3,000. So like here's a strategy that from some of the stats, especially the MAE, MFE, and my win rate, look really, really great. But guess what? It wouldn't pass the combine. It wouldn't pass the combine. The rules of the combine are holding you back. The biggest, when you're talking to these people and they're like, but like the prop firms, they can be useful for these one things, like it teaches you to follow the rules and all of, and teaches you good risk management. No, it doesn't. The rules that they're giving you are objectively harmful to you. Like, they prevent you from going into the strategies that can actually provide some real gains for you. This is also why why isn't that I don't have the same results on my live trading with these micros? Well, it's because I'm not willing to take on the amount of risk that it takes to get these results. To get these results, I have to hold during periods of high volatility, and I have to take really big gambles on, how certain things are going to turn out, and maybe hold through news and stuff like that. And I'm not willing, I know that I can take a big enough loss on that on my tiny little live account here. I would need to have like a $5,000 to $10,000 account over here for that to even make sense. You see, like, what's really actually holding you back is like your ability to take on risk. And the combines basically limit your ability to take on risk at this perfect spot where you really have no chance and they just make money from you. Yeah. Please, we're going to do a whole video on this subject. It's just like, I don't know how to end the video. It's like, I'm going to show you guys the Monte Carlo simulation. I'm going to rant about why prop firms are bad. Maybe I should just show my results there. Maybe that's the way that I end it. I need to think about that. So I'm thinking something else here. Oh, it's almost time for us to get going. How did you guys feel about the trades that I took in ES? I think it was a little bit of randomness. I think I was picking up on some momentum to some extent and everything. Really liked this trade here, for instance. Was still slightly losing day. But, y'all was kind of quiet about it. So yesterday we did this poll about, like, what would you be most interested in doing? Well, let's YOLO. And I kind of asked, well, is it because you think that it would be interesting? You think that there's something we could really learn from this? Or is it because you think that that would, like, be the most entertaining and would bring more people to the stream and all of that sort of thing? And I kind of feel like it really wouldn't do that. Like, it really didn't do that. It was really just kind of like whatever, like, it didn't change the stream that much. And so I'm still like, don't you think it would make more sense? Don't you think it would be more interesting to, like, back test momentum strategies? I don't know. My degenerate risk taking over here in ZN is worked out pretty well. I guess I should do it in ES. Maybe I will. I'm too logical. I guess so. I mean, I guess part of it is like, okay, should I try and show people, like, here's how you could pass the combine, or here's how you could pass the prop firm challenge? Well, but I kind of want to go more degenerate than that, So I'm kind of thinking about going back on my promise, actually. I'm kind of thinking, hey, next week, let's just do momentum. Let's just do momentum for a month, because the subscription is only going to last for like another month, and then I'd have to pay again. So like, let's just hit that really hard until the subscription is done, and then the beginning of next year we can do more degenerate risk taking. You know? And then how interested are we in actually like building our own platform and things like that? It doesn't sound like you guys are that interested in it. So maybe I could do that in my own time, but we'll put it on the back burner. Let's get more videos out. You know. Position sizing. I really would like to do here's the thing. There's definitely something to like, okay, changing your position sizing based on the volatility, things like that. I think that's pretty easy rather to sort out. Like, yeah, of course, if it's moving twice as much and you want your profits and losses to be the same, then you're going to have to trade half as much, right? But it seems like that there's some edge to it as well, that it's like, okay, there's some situations where you trade larger and not larger based on like how certain you are about it or something like that, right? And like there's some edge to be gleaned there, and I've never really found anything that actually shows you like a real actual edge from it. The only things that I've ever really seen on this sort of a thing are like the kinds of stuff that like Futures Trader 71 talks about, where he's like, use this targets, you know, and like have these different levels of targets and have your stops over here, and this gives you the best, you know, yada yada yada. And you know, like all of the backtesting and everything that I've done kind of shows that like no, it doesn't really actually matter. Might matter to your psychology. So it's just like, there's got to, and there was one book that I had about this that maybe I could read. But I guess I'm kind of coming back to this thing where it's like, okay, like I do have some extra free time. How should I be spending that free time? And I'm kind of coming back to like, I think that we're doing about the best that we can, actually. So it'll be slow going, but you know, like today here, I should be ending the stream. I'm gonna track down this bug. That's the main thing. And probably submit some more resumes. So I saw a couple of ones that looked okay. So we'll keep doing this degenerate gambling, and yes, I guess, but kind of want to do more momentum now. I don't know. We'll see. We'll talk on Monday. Stay excellent, team.